It's Market Day Report. Just trying to make sure I've got my numbers right here. Flash sale of soybeans to China reported by USDA this morning. I take the metric tons number. I think it's 135,000 metric tons. And what I do is I convert that over to bushels. A little easier for me to think in bushels. And that's 4.86 million bushels. So a nice little sell of soybeans to China, new crop. Speaking of that, here's the soybean market, and the new crop is November. We're at 11.91. We're off the day's high. We've traded, though, in a 14-cent trade range. 11.91, we're down 1 3/4 cents today. Let's look at the rest of the complex. Soy meal contracts continue to move lower, and bean oil moving lower as well. How about the corn market? Is corn still in positive territory? Yeah, kinda. We're one tick higher at 472 on the new crop. Let's go to the wheat. Wheat was leading the charge and still is. 669.5. That's up 8 3/4. We have hard red still up 13, 738.5. And then we've got the cotton market just sitting over there, gaining a penny and a half at 81.09. Nearly hit 84 cents earlier on the May contract. Chip Nellinger is owner, Blue Reef Agri Marketing. He's in lovely Morton, Illinois. All right, Chip, it's hard red leading the charge. What's happening?
Yeah, more tensions in the Black Sea, continuing reports of missile attacks on grain facilities, grain loading facilities. And so for all intents and purposes, it looks like that Black Sea is still closed to both Ukrainian and Russian grain flow. That is fresh news. Remember back late last week, wheat sold off on some rumors that there may be some sort of a temporary agreement between those two countries to limit attacks on those facilities and ports. That doesn't look like that happened. In fact, it looks like that's taken a turn for the worse. And so that added some risk premium back in the wheat market, helped the corn market out a little bit as well. Certainly, causes a lot of uncertainty and volatility in here when you've got a war and geopolitical tensions as part of this story, Tony.
Okay, and one of the other stories we've been following is the drought that's been happening, the dry conditions in the European Union. Is that factored in, or is that something that could provide even a boost down the road?
Yeah, I think the damage is done there. It's getting too late in the season. So not that it's going to go away anytime soon, but I think a lot of that story is played out. The longer term effects are that you're not going to have nearly as much feed grain stocks out of Europe. They may have to become an eventual large importer of corn and potentially wheat as well, but certainly corn. So that is going to be a supportive factor going forward. I think in the short run here, it's more about weather. The markets have sold off here recently in the case of corn and beans on expectations that here late week and Saturday, there are better rainfall amounts across those dry areas. So that's in the market. What's not in the market is what happens after that, or if that coverage of rainfall is less than anticipated, then we've gone too low. So there's plenty of weather volatility dead ahead of us going into the weekend and the early part of next week as well.
All right, so if we've got not necessarily the telescope, but we got our good driving glasses on, and we're looking, trying to see that sign a couple of miles down the road, i.e., a visit from the Chinese president to the U.S. If we hear some kind of an announcement maybe on corn, again, I'm being very speculative here, but if we see that coming down the road, is it game on?
I think it is game on. There's been rumors, for 3 or 4 months now, that China, as part of this trade deal, will eventually buy U.S. corn and likely U.S. wheat as well. There was an announcement a week ago of corn, a flash sale to unknown. That doesn't have to mean that's China. But if you have a confirmed purchase of U.S. corn by China, that alone is a game changer because My personal opinion is they don't publish this, just my opinion. They have zero corn demand from China built into the balance sheet. They, meaning USDA. They have plenty of demand on the bean balance sheet. So if China comes to the table, that's not in the balance sheet on the demand side in corn. It's likely got to go up anyway, even without China.
Yeah, and the other thing is it's a specified amount that they're spending, not that they're buying so many metric tons. So at that case, obviously they want to get a good deal, but at the end of the day, they just say, hey, here's the blank check, fill us up, put as much you can in the bucket. I don't know. But Chip, good conversation here. Let's continue it on the other side. This is Market Day Report. So looking at how we performed over the past week, the month, the year to date, and there's a lot of red here when I look at live cattle, down 6% month over month, down 2% for the year. We are higher across the board right now with live or fat cattle. We're trading at $229 and a quarter. That's $1.35 higher. The deferred contracts, all of them, $224 or $225. Again, we're staying in that really tight range there from the bottom to the top of those next four contracts. The bottom side is $224.52 on the December, and the top is the one right before it, October, at $225.05. So roughly a 50-cent trade range in those next 4 months. I find that very interesting. And then you look over at feeders, and it's not the case there. Now, we are back into positive territory in those, well, not the August. We're still down $1.27, but we moved positive on all of the other contracts. Now, those next 4 months, September through January, the bottom there is January at $3.18. The top is $20 higher, September at $3.38. What can we tell from this? Well, we bring back in Chip Nellinger from Blue Reef Agri Marketing. What can we tell by looking at those deferreds and the tight range there on the live side and the wider side on feeders?
Yeah, Tony, I think on the live cattle side, that's interesting to point out, and I agree that that's a pretty narrow range when you're looking at those deferreds. Says to me that on the live cattle side, maybe we're at fair value. Nobody knows really what to expect out there. We had some massive moves in feeder cattle spreads. You mentioned that the front month is way over the deferreds. That is, adjusted since this news last week from the USDA of the reopening to a limited extent of the Mexican border to feeder cattle coming in, right? It doesn't mean that we're going to see those cattle in the next week or two. So that front month is tied to the cash index, the feeder cattle index. But the deferreds are sure reflecting the fact that we're going to have a bigger supply of feeder cattle here out in the future. And those spreads have moved a tremendous amount in feeder cattle over the last week.
Chip, anytime we're talking about commodities, we're talking about so many different variables working their way in. Sometimes I wonder, is it a little easier when we look over at the equity side? Because I know you got quite a few variables in there, but you're also not dealing with something that is perishable, if you will. So the equities, what are you seeing there?
Yeah, we've had some big volatility in the equities. We had the Federal Reserve Chairman talk yesterday, new sheriff in town, so everybody's trying to get a feel for exactly how he's going to play this game. His delivery is a lot different than previous Federal Reserve chairmans, and so a lot of movement in the interest rate market and in the stock markets yesterday and then overnight and this morning. So a lot of volatility. They're not any easier to read the tea leaves, even though they're not perishable items. Certainly going to have an effect from a money flow standpoint on our commodities. Energy markets are also part of that. And obviously, everyone knows the potential conflict and, volatility we could see out of the Middle East on that regard. So nothing's very certain in these outside markets right now, Tony. Yeah,
just looking through crude, and now we've got Brent trading at below $90. Gasoline futures, we've been gaining here in the gasoline market. Nat gas futures, after a higher trade yesterday, were mostly higher here, and we'll end it up with diesel Diesel's been the leader here as it's traded up over 90% year to date. We're a little lower right now. All right, Chip, thanks for the conversation. Appreciate your insight. Chip
Thanks.
Nellinger is owner of Blue Reef Agri Marketing.